Hey, it's Ted here with Bodies and Wicks. How's everybody going? My last video did not go as planned at all. I'm making another one. And what we're going to be focusing on is we are going to be focusing on um, uh, order blocks. Order blocks, order blocks, order blocks. What is an order block? Well, I will show you in just a second. But first, a word from our sponsor, Propel Grape Water. It's delicious. Actually, they're not sponsoring me. I wish I was like BitBoy Crypto and could, charge people $35,000 for mentions on things. But yeah, I'm making money trading, but I'm not charging anybody to say anything yet. Wink wink. But anyways, all right, let me shut up and actually get to this. All right, so what is smart money first? If you're wondering what that is, smart money is not dumb money in essence. Basically anything that you were taught, such as trade when there is go short whenever there's a double top, or trade along a trend line, or there's support and resistance is on this specific line. Those things are usually false, or they may have some truth to them, but generally the smart money people will know what you're going to be trading, as to what is coming up and what you've been taught, and they will usually go against you. Usually, I say usually, because they'll let you get away with some of the trades that you've been taught some of the time. Why? Because if you lost every time, you wouldn't trade, would you? No. So of course they're going to let you win a couple. It's usually about 30% of the time. And the reason I say 30% is, if you've heard me say this before, has to do with the big rat, little rat game, or I should say big rat, little rat experiment, to where the big rat would let the little rat win 30% of the time, and that was so the little rat would keep playing. Otherwise, if the big rat kept winning, then the little rat would stop playing. So the big rat would let the little rat win 30% of the time. So that's generally about how much they let you win, unless you think like them, unless you are a thinker of the institutions. Then you will win the mighty sword of all the monies, and you get to keep the bag and go home. Huh. You peons, you. All right, so first thing we're going to do is we are going to take a look at, we're going to look at Ethereum. Right now, I am on Coinbase's Ethereum. So I know I'm right in the thick of it in the 15-minute, right? So you can't really take too much away from this, especially when you're in the 15-minute, about order blocks. So we are going to back out and go to a larger time frame. Let me see which one it is. Here it is. Okay, so let's not even start with the weekly. Let's start with the monthly. All right. So at first, I have this one here already drawn out for you. All right. This is a bullish order block. Now, why is it a bullish order block? Because whenever you have a bearish candle, right, that pulls back, and a succession of candles, or generally it's the last down candle before an up candle, and generally almost at the bottom of like a U shape, right? It'll be the last red candle before the next green candle engulfs it, basically closes above it, right? And I mean, it closes above it, not just the wick and there's a little body down here. I'm talking the whole thing has to close above it. That's when you get a bullish bullish order block. All right. So what does that mean? What does a bullish order block mean? Well, what it means is that generally once chart kind of runs up, runs its course, gets to a specific point, and then starts to fall back. What will it do? It'll probably fall into that bullish order block and then bounce back out. That's what it is supposed to do, technically, according to smart money rules. Now, there are times when things don't go your way, right? And I'm thinking it's not gonna go 100% our way with this one, because if it was, it would have continued moving up after. Because as you can see, I have it right here, but I have it right here for a specific reason. That's because once we get to the weekly, this is where the order block starts, but the monthly is actually up here where the wick starts, right? That's where the wick starts. Technically, that's where your bullish order block will start. But that was for the month of September, right? But once we take a closer look at the weekly, we will find out that that is not exactly the case. So once and generally, what will happen also whenever you get these, take a Fibonacci. Look at this. A Fibonacci from the bottom of that red candle to the top of your wave, the bottom of the red candle, the top of the wave. The pullback would usually almost be at your 61.8%. That's why this level is so important. That is technically your discount level, right? Anything below that also will be your discount level. So it can still pull back into here, and it if it wants to, and it's still going to be within the bullish order block, as long as it doesn't go down below here and close below here. That's what we don't want to happen, because then all of a sudden we are in a bearish. Technically, we have turned the chart bearish. If we are on the monthly, anyway. If it's on a if it's on a 5-minute, 15-minute chart, something like that happens, well, yeah, then you're just kind of more of in a bearish moment. I wouldn't say you're in a bearish, you've turned into a bear market, if you get my drift. All right, so, and what I think will happen is that I think we're kind of resting, kind of like what it did back in May, June, whenever we didn't get, it didn't pull back as far as Bitcoin did, but it still had its pullback, but then it continued to move upwards, and I think that's probably what's going to happen with this one. Why? Because if you look at this, and if everybody was going off of their stupid trend lines that they believe in. This is why I call them stupid, because trend lines to me don't exist. Trend lines and smart money don't exist. Why? Because this is, look, you think, you're touching 2 points here, and then this guy comes in. Do you think when it touched that, you know how many people probably bought on that area, thinking that it was going to continue going up? Probably a lot of people. Probably a lot of dumb people. I'm not saying dumb people. I'm sorry if you're one of them. I'm not trying to insult you, but there was probably a lot of people that bit on that, thinking, "Oh, this is how things work." No, it's not. Okay. Instead, what it did is it went into that trend line and pulled back into it, because that's where the liquidity is. This is where everybody wants to buy. All the retail traders, anyway, people like you and me, are taught to buy, because this is where we think, the trend line is, and it's going to keep going. So instead, what does it do? It takes its time, it pulls back, and then now you have, see here, we really don't have a red candle anywhere. So there is a huge fair value gap right here, which we talked about yesterday, if you watched anything about mine. But I would consider this right here. You have this big wick pulling back all the way down to here. I would start right there. Then go up to here. As you can see, it pulls all the way back down into where it is the 88.6%. That's why I have that level there, because that is a good institutional level that people want to buy at as well. Why? Well, let's think about it. Would you rather have something at 68% or 62 or 68.2% off? 61.8% off, sorry. Or would you rather have something at 88.6% off? Well, you'd probably rather have something at 88.6% off. So guess what? The institutions generally try to push things a little bit further down just so they can get things at a cheaper discount. And they'll let you sell off your money to get there. They'll trick you into selling off to get there. And once they get there, then boom, they'll start buying it up again. So, and then that's why I drew this here, is because I have a feeling that's going to happen again. We're going to have another instance to where we're probably going to get down into this box. You know, Ethereum and Bitcoin. We may have a couple months to where we may have a little bit of a pullback. But who knows? We'll see. And it gets into this order block, and then it bounces out. Now, once we go to the weekly, that's why I have this drawn here, because once I draw this out here, you'll see. Okay, so right here underneath, it's probably right above my head, so I'm going to move it out, and I'm going to move these guys up bigger so you can see. As you can see, this wick on this red candle. All right, so like I said, it's your last down candle before your up recession and closes above it. So this right here is definitely an order block. But you also have a preceding red candle, right, that is within the confines of this red candle as well. The wick comes down, it's still within the body, it doesn't go below this wick. So this can also be considered part of the order block, right? As well as this wick right here, it goes all the way down and then starts pulling back up. So I wouldn't consider this as the start of the order block, which is that whole monthly red candle that you see. Now we have 3 weeks going down consecutively. I would just consider it these 2 weeks, just because this one pulls way too far down into here. And what happens whenever you actually draw this out? Well, whenever it does start pulling back, what does it do? Boom, it comes back down into that area. Now, I drew this line out because it was in the monthly. That was the top of the previous month. Which, let me see here. I'm going to go back to the monthly real quick because I want to see exactly where this was. Yeah, you see there's a wick right here. Right there. See that? There's a wick right there. Now, but if we go to the weekly, it changes, which I don't understand. It's not there anymore. But it is what it is. However, it is into that same area to where we were talking about as far as the weekly is concerned, where this order block starts its procession down. Oops, didn't mean to move that. If we take a look at the daily, we'll probably even get a better idea. Yep, see, boom, pulls down, and then pulls up, and then now it starts its last procession down before it moves up. That's what we mean by when I say last candles down, all right, okay, last procession down, whatever it is. And even then, as you can see, once we get to the daily is even better to look at, because now we have these two red candles, green candle up, and then we start the red candles down. Where does it go to there? Boom. Exactly to that point that is the bearish order block, is these 3 candles right here. So that's why you got to kind of hone in on it. Start with the monthly, go to the weekly, move to the daily, and then you'll see exactly what I'm talking about, because something will pull back and hit it. Now, like I said, I have left this here, and as you can see, it's still kind of following along this trend line. It is doing that on purpose. Eventually, it is going to break that trend line. I don't know when, I don't know where, to be honest. And it may not do it for another couple months. But I mean, it did kind of break the trend line here, to be honest. It did break into it a little bit. But the reason it broke into that trend line wasn't because there was a trend line there. It was because there was an order block here. It wanted to get to the order block. And that's exactly what it did. So it comes down, it touches the order block, boom, it gets rejected. That's what order blocks are for there. That's the main point of an order block, basically. Is that once you get this precession of this low to this high and you get the pullback, it usually gets to the order block and then is rejected. That order block is usually at the 61.8% or lower. Now, if we wanted to really, really get into it, we could get down into the last 2 here. All right. And if you want my personal opinion, yeah, I think that's where this is going. Why? For one, all right, so let's just say that is the order block. All right. I am going to do a little bit of different styling around here. Let's make this thicker order block or something. I don't know. Let's make the background green. No, let's make it like purple. Who really cares? It's not going to matter anyway. All right, so and then we'll just put a text that this is the daily, right? So order block daily. So again, this is the start of the precession. So this technically is your bullish order block. Why? Because it's your last couple candles down before it makes its precession up and closes above it. Right. However, you still have this almost mini order block in here as well. Right. And within this mini order block, you also have a fair value gap. I'm going to change this one's color so we don't get confused here. There we go. So there. Now we have a daily fair value gap. Let me put that in the text as well. So not only do you have a fair value gap, which is basically an imbalance that we talked about on my last video, but you also have an order block that basically cuts that imbalance in half. And what I talk about everything, I've talked about this so many times, things being halved. Look at your imbalances, see if it's going to come back into the halfway point of it, right? And usually it does. So I have a feeling at some point we are going to see Ethereum pull back all the way down into at least the halfway point of this fair value gap, which is also the daily bullish order block, the real one, quote unquote, the real one, not just the one that started the precession, but the actual last 2 daily candles down. All right. So in my personal opinion, yeah, I think we'll eventually get there. I think what's going to happen is we'll probably, let me see if I can find There's the path. It'll probably bounce around, come up here, hit this, play around, come up here. It may break the high, and play around, but then all of a sudden it's gonna pull back and pull back hard. Um, and like I said, this is days we're talking about. So we're talking. I've got it marked here on February 7th to where we could see this happening. It could be that time. I don't know. What you have to do is you just have to watch for these things. You have to watch for these order blocks. You have to watch for these fair value gaps in every capacity whatsoever. And look here, I even have a daily fair value gap right here. Well, actually, that's not really a daily. I think that's a 4-hour one. But daily's right here. You can see it barely comes out of the daily and then gets rejected. But the 4-hour one, it gets to the top of and then gets rejected. So, and here's another thing too, is that something like this, and that whenever something gets rejected on a daily, what you want to do is you want to go down a time frame. You want to go down a time frame because that's generally where your next clue is. And so you have a 4-hour fair value gap. I would consider this all one big fair value gap, even though you could technically break it up into this and then this one over to here. But considering these two candles are running together, there's almost no wick whatsoever. I would consider that all one big fair value gap from this candle all over to this candle, right? So that is your fair value gap. So boom, it hits this on the daily 4-hour. What are you looking for? Fair value gap. You got a big one here. There's not one here, right? So it fills, pretty much almost fills up here. Look, you can see as this wick comes all the way down past the body here, comes up, almost hits the wick, pulls back, and then pulls back up into the area here. Moves on up into the fair value gap, gets rejected, comes back down. Where does it come down to? Bullish order block. Found it. Do you see it? Boom, right there. That's a bullish order block. Let's make sure we get the bullish order blocks. This gold color here. All right, so there you go. And whenever I have a bullish order block, you will usually see me put a plus OB. Make that capitalize. And what I put OB, order block. Put it on the bottom so you guys can see it. Okay. And I'll hopefully not make sure it's not behind my head. So now, put the order block as far as you can. Look, you can see, boom, comes up. Now we got the fair value gap. Stays in the fair value gap, almost gets to the top. What's it rejected by? Last two candles up before the two candles drop and close below it. That's your bearish order block. Look, it hits the top of that. Hits the top of the bearish order block while it's inside of the 4-hour fair value gap. Now, this is an imbalance it's trying to fill. Now, it can't fill it because there's a bearish order block. So, boom, hits the bearish order block. And I want it here. I think we did this last time. Here's the high. Right? What is the high? 4492 basically, right? What's the low here? 4495. So doesn't touch it exactly, but it gets very, very close. Enough to know that, well, if we go to here, to where this red candle is, where it starts the procession up, then I'm sure it does. Yes, it does. What's the low here? 4473. Okay, so yeah, it does. Sorry, yeah, 4473. So yeah, it does actually. Whenever you get to this low and start the procession up, that would be your up candles before your down candles close below it. Right. Once your down candles close below it, then you have a bearish order or a bull. Yeah, this would be a bearish order block. So it comes up. It's trying to fill the fair value gap, but it can't because boom, it hits the bearish order block, comes back down. Now it says, oh, there's a bullish order block. Fills the bullish order block, tries to bounce back out, right? And I'm sure if we got on a smaller time frame, we could see on the 1 hour what happens. Another bearish order block. Boom, bearish order block comes back into the bullish order block, except this time whenever it's coming up, it doesn't want to deal with it. Actually, it hits it back from back down here. I mean, to be honest, this whole thing is a bearish order block. This whole procession up, because once this pulls down and closes below it, then that is anything going up from that point on is considered the bearish order block. So it's stuck in between both of them. So it doesn't know what it wants to do. So what does it look for? Liquidity. That's the next point. It looks for liquidity. So where's the liquidity at? Well, considering there's equal lows here, there's a lot of people thinking, hey, this might be support, right? Hold on. Stop it. Look at that. That just might be support, right? You got the low here. You got this guy coming down to here. Doesn't necessarily test it, or these two guys could be support where this orange line is. But what does it do? It wants to attack that liquidity because people already have their buy limit set there with short stop losses, thinking that it's going to go up from there. So instead, it goes against it, against what you were taught. Remember? I told you it goes against what you're taught. You're taught to buy at levels like this because it is taught to be support. Instead, it goes through it and then tries to pull back up. It lets you chase it and then pulls back again. Huh. I wonder why. Because it wants your money. It wants you to buy in these areas. Now, if you bought here, you would have been okay. But you would have been scared because it already went against you once. It comes up here. It pulls back again. You don't know if you want to get in that or not. So it does this to trick you, right? And then eventually, once it's done tricking you, basically, then it finally takes off. Then it says, okay, look, we've made equal highs here. Made equal highs here, right? So now what do we want to do? Now that's probably a selling point, right? Since it's been selling on you, right? So now everybody's going, okay, so now it's probably bearish. So now once it gets up to this area to where it's sold a couple times and sold off, once it gets back up to there, it's probably going to sell off. So what does it do? Boom. Runs the buy on you. So whenever you're there and ready to sell, it goes against you. Again, against everything you're taught. So now what is it doing? Well, it's creating... Well, I mean, for one thing, I can already tell you that there are... Let me get rid of... I don't really need to get rid of it, but you can already see that there's kind of double lows here, where there's a they're close to being lows basically, but this is a liquidity point. All right, so this is a sell side sell side liquidity point, right? Well, we also have equal lows. Close enough to equal lows anyway. So, so what is this thing going to try to do you think? And we also, oops, I just moved that on accident. And we also have kind of somewhat equal highs. So it's kind of just in this range. It's range bound, right? But it's going to do something sooner or later. So what do? Well, you think about your imbalances that you may have, which you have one here, right? That is that's your fair value gap. And now also what I would do is I would throw another, I would throw another fill on top of that. Spread that out. See what's going to happen. We are now down into the 1 hour of these things. Now, look, and look exactly what happens at the 61.8%. Your bullish order block. Actually, and since that is a fair value gap, let me put a different thing on there so we're not confused here. And also let me write on it as well. So fair value gap, 1 hour. And then now we have this guy, which is our bullish order block. All right. So what do you think it's going to do? Of course, it's going to look to try to fill this void, this liquidity void, and probably come down and hit the bullish order block. If it doesn't hit exactly right here, there's another candle right here that it could possibly hit. This is your last candle down. So that's where I would be aiming, to be honest. 61.8, I mean, it's almost right at the top of it. I mean, it pretty much is if you count the green candle that starts the down procession, because it gets to the high. What happens when it gets to the high? It's got to pull back. So now it's pulling back from that point, but I would be looking at the red candles. This close in, I'd be looking at the red candles. So here you have the fair value gap, 1 hour. Here you have a bullish order block. I actually put it in parentheses what time frame I'm on. All right. So yeah, I would expect this to come down through here because we've look, it's already went through the liquidity point, right? And also, why did it get stopped here? Because if you look over to the left, you have a bullish order block right there, your last up candle before it proceeds downwards and closes down below the up candle. So that, and it's that right there is a bearish order block. So it hits another bearish order block on its way up. I mean, stopped right at it. Look at it. What's the high there? 41.17.40. And what was that? 41.18.76. So it stops just right there. But actually, well, no. I thought there may have been something else just below it, but really not. So it comes up here. And the same thing with this one. Why did this one get stopped here? You have a bullish order block. Or bearish order block, I meant. I mean, it actually starts right here if we want to really get technical. But something like this with a wick like this right before the precession, I would be looking at the body. Whenever you have order blocks, usually use the bodies because that's where most of the trading takes place, not the wicks. But even then, if we looked at the body of the red candle before it, I don't think it changes that much. Now it just goes up a little bit. That's all. So it comes up, hits the bearish order block. That's pulling back. There's equal lows right here, right? Comes in, closes this, what was a fair value gap, right? See, it closes that in. And then now that it closes in the fair value gap, now it doesn't, but there's equal lows. So now that we know that there's equal lows, more than likely it's going to go toward the liquidity. So it's going toward the liquidity, breaks that, which is where people think, of course, this is where people would think this is a support level, right? So instead of it being a support level, it's not. It breaks that, thinking that people that would be trading long, instead it's going short against you. It's probably going to fill this fair value gap, right? It's going to fill this fair value gap. More than likely, what I think is going to happen is that it will get about halfway through and probably bounce right around in here. Why do I think it'll bounce right around in here? Look over here. This is where the precession starts. This is the precession down starts. So it'll probably bounce right up and around in here. And then it'll find what we call a breaker. And we'll talk about breakers some other time. And then come back down into this area. And I think it'll probably get, probably to here. Maybe about 37.45, 37.50 area before it finally bounces out. If it does, who knows? It may create another breaker, and we may see it actually go through here on the other side. But what the order block is supposed to do, and what I think will happen with this precession, is I don't think it will stay down there. I think it will bust up out of here. I think eventually we'll continue going higher and moving forward. All right, but it may get stopped along the way by this bearish order block. Your last up candle. Well, did it stay? Yeah, it stayed. Your last up candle before moving downwards. And then it could pull back. And just like we see with these other ones, pull back into these fair value gaps. Let's see here. Pull back in, maybe just to the beginning of it or something like that. And then eventually try to run the highs. Because now we have 1, 2, 3 liquidity points. We have 3 points to where people could say, hey, that's an area, sorry, I'm losing train of thought here. That's resistance, That's resistance. So it could try to hit these points of resistance and then fall back and then run them again. Something like that. But what I'm thinking is that it'll at least try to fill this fair value gap, pull down into this order block, and then pull up out of there from there. So if I was a betting man, I would at least, especially if I was just trying to make some, some quick, scalps. Wait till it pulls down into here. Throw in some money, especially wait to see how far it gets into it, and then see if it's going to push out or not, right? And the reason I say right here is because there's a little tiny fair value gap right in here. Now, I really don't know if this is going to have any bearing on it, to be honest, because it's already kind of in a balanced area, because you can see it's already started here. It's come up, it's come down. So this area is already kind of balanced, but there is a bullish order block right here. This area is not balanced. As you can see, it's kind of the same level with this bullish order block. So there's a bullish order block here. It leaves it open, comes down. Now this fills it, and then it runs through it. But is this whole area right here balanced? Not really. So I would think it would come down in here to try to balance that out, then hit this bullish order block, and then run it. Now, the reason I say all this is because this all has to do with and I'll get to this at some point. It's called the market maker buyer sell model, and that is derived by Michael J. Huddleston. So I'm actually going to Google this. Market maker buy sell model. And we're going to look at pictures of it really quick. Exactly. So as you can see, this is the sell model, to where it goes to different areas, fills them, goes to different area, fills it, goes to different area, fills it, goes to different, fills it, different area, fills it, different area, fills it. And they're all on different, almost planes. Some of them are the same, but most are not. As you can see, it created by, this is by Mentor down here, Inner Circle Trader. And it does this with a lot of different charts. And that's why when I look at ETH, I think the same thing. I think, hey, this area is already balanced. It's already filled. So where's it in it? It's came up here, and look, it's already on a level plane, to where it's already been balanced or filled. So what's it going to do? It's going to go down in here into the unbalanced area, right? And then probably come down, hit the bullish order block, and then bounce back out. That's why I think it could also try to get below it. Why? Because there's nothing down here. We scroll and look to the left, there is nothing down here. So as you can see, if you put boxes around all these different ones, what you're going to find is a lot of these market maker buy or sell models. You'll find a lot of them, and that's kind of how the market works, right? In an overall perspective, that's what you're that's what you're technically trying to look for, is something like this, the buyer, market maker buyer sell model. This is not Wyckoff, right? Not Wyckoff at all. This is something completely different. This is Inner Circle Traders market maker buyer sell model. And it happens in every single market. It doesn't matter what market you're in. Here is my stuff from earlier and what I thought it might do. And I put, Here we have, I think we had some kind of fair value gap here, and it could break down into here and go about halfway down in. And this is because we're in the 15-minute of this. In the 15-minute, we have this red candle, right? And this could also be a bullish order block. Why? Because all of this is already this area has been filled, so it has been balanced. Again, my first two things I said, price looks to balance, price looks for liquidity. So if it is already balanced, it may not want to come down into this order block. But I think what it's going to do is it's probably going to come down, fill this imbalance that we did see on the hourly, right? Even though we did it on the 15-minute, yeah, it did have a pullback, right? But on the hourly, it's on an imbalance. Look, it's already pulling down into this hourly imbalance if we are to run this. See, it's already pulled that into it. Why? And it's pulling back up, but if we get on the 15-minute, did it hit? Yep. It looks like it hit the top of this. So this area could already be balanced. We could already be considering this balanced. And now what we're looking at is that this being the low, this being the high. And now look, now we're at the 61.8% for this. If we were to consider this as the bottom of the wave. Why would we consider this the bottom of the wave? Because the rest of it's already balanced. So this runs it. This candle here runs the highs on these, right? And then boom, now you're done with that wave. So now once it pulls back, you're on a new wave, right? So that's why I would consider this where the start of the new wave is, because this the high, and then watch the pullback into the 61.8%, and see what happens. Now, I think I said it could probably get back down into where this red line is, and that red line is basically on the top of where these guys are, the top of this. It's a little off, I think, to be honest. Let me see. Yeah, a little off by a couple dollars. But it's the halfway point as to where I was pointing out before. But if I get rid of this fair value gap that I had before, and then I was to do this on this fair value gap, where's the red, right? Now that line becomes a little bit different as far as the halfway point is concerned. As far as filling halfway of the fair value gap is what I'm meaning by this. Not talking the 61.8 of the whole wave. I'm talking about filling halfway of the fair value gap, or filling halfway the fair value gap. Now you're looking at that. Now let's go back to the wave. And now you have an area as to where price might go. Right? Anything below this 61.8% to this area here. Now you could be a betting man and possibly place a long bet. Right? Or, and me personally, this is what I would do. Just me personally. I would personally be placing a long here, a quick long, waiting for it to get back to this guy, and then getting out. Why? Because this is your next bearish order block. That green candle there, your last up candle before your down candle, and it closes below it. That is your next bearish order block. So I would expect it to rise up to at least that area there before it starts pulling back. It may take a while for it to get there, and then once it does, boom, it could start lowering back in, and then it could get into this area that we're talking about here. It could start looking at the bigger picture into the hourly, or we could start looking at the bigger picture of that and into the 4 hour of it and seeing what's going to happen after that. So you got to kind of take this is why you have to do multi time frame analysis on these things, because you don't know exactly, you can't do time frame analysis on just a daily chart or just a weekly chart or just a 4 hour chart. You have to do multi time frame analysis, looking at these order blocks that I'm talking about. That's why that was the whole main focus of this, was these order blocks, to see if it's going to come down into it or not and then bounce out, or is it going to run through it and then get to the bottom, while thinking ultimately in mind of the whole big picture of the buyer market, the market maker buyer sell model, right? So anyways, that's all I've got for today. That's all I'm going to go through. That's what I wanted to get to you guys, and that's what I wanted to try to say earlier. I know it didn't turn out that well, but hopefully this helped you out. Hopefully you guys learned something, and I will see you all soon. But remember to always wear your pants.